we're here to talk about Dave Ramsey and long-term care insurance. I'm Derek Wilkins, and this is Drew Nichols.
Hi.
Drew, so tell us, what does Dave Ramsey think about long-term care insurance?
Well, Dave Ramsey likes long-term care insurance, and that's the good news. He does have a few caveats a little bit. He says by at age 60. Now, what do you think about that, Derek? Well, if you're 55 and watching this.
Yeah, right. I think our average age is about 55. Buying it at age 60 compared to 55, it does come with a risk. And I think the variable Dave is not considering is your health. Because typically as people age, their health might deteriorate somewhat. Maybe you start taking prescription medications, maybe you develop diabetes or you have a stent. And the older you get, the more of a risk you are to the insurance company, thus the harder it is to get the insurance.
Now, the reason why he says 60 is because once you reach age 60, the chance of needing long-term care increases year by year. But the time to protect yourself is not right before your chances start increasing. It's well ahead of it when you're in good health. So if you're in your mid-50s and you're in good health, why not go ahead and get a lower premium and be guaranteed to get coverage because you're in good health versus rolling the dice on the future?
Yeah, exactly. And then a second issue that Dave points out is, what type of people, what are your options when it comes to protecting yourself? You can either self-insure, pay for it out of your own pocket, and if you happen to have many millions of dollars, you can certainly do that, but most of us are not in that situation. The second is you can depend on the government, and the government has the Medicaid system set up, but you have to be very, very poor and pretty much have no assets to qualify.
So one thing that a lot of people will do is, let's say they have a nice home and some assets, they'll transfer them to their kids or to a trust. And Dave just comes out right specifically and calls it what it is. It's fraud. If you're trying to apply for a government program for needy people by getting rid of all your assets through a lawyer, it's fraud.
Yeah, and he's not a proponent of that, and neither are we. And then the third option is to buy long-term care insurance, which we're a big proponent of for the right type of a person. I mean, it's not for everybody. No. Again, if you don't have any assets to protect, you don't need long-term care insurance.
And we draw that line at about $75,000. If you have assets below $75,000, there may be other programs for you. Maybe.
Yeah. Well, Drew, Dave also goes over how people can buy long-term care insurance. Yep. What does he recommend?
Well, Dave has a network of local providers called ELPs, or Endorsed Local Providers. They're good people that he does a little bit of vetting on.